Hey, good afternoon, everyone. My name is John Giminati, EVP of Production here at Angel Oak Mortgage Solutions. Hope everyone's having a great December. I hope everyone had a great Thanksgiving. Hey, we're going to switch it up here a little bit today. I'll introduce our subject matter experts, and our subject matter experts are great account executives all across the country who've participated the most in our webinars during the year. So, but today we're not going to do a deep dive. We'll take your questions and answer any questions that you have regarding your scenarios. But we're going to kind of take this time to be thankful for professionally what we've been able to accomplish this year, not just as individuals, but as a company, and hopefully making your life as an originator and your borrower's life in the non-QM space easier by whether it's enhancements or process improvement. So we'll let everyone log in here in a minute, and we'll get started. I know we're all pretty grateful and thankful for a great non-QM year, and non-QM is going to continue to grow into next year too. So, it's definitely going to outpace what the mortgage bankers are suggesting their increases are next year, just like it was this year. And we should be doubling what their projections are. So let's get started. People still logging in. All right, let's get started here. My name is John Giminati, EVP of Production here at Angel Oak Mortgage Solutions. Getting close to my 12th year here at Angel Oak. So, but I wanted to introduce our subject matter experts. Today, we're not doing a deep product dive. We'll take your questions, your scenarios. We've got 5 great account executives across the country on here, and we chose them by the ones who participated the most in all of our deep dive product webinars throughout the entire year. So I'm going to start on my panel. It's to my left is Oscar. Please introduce yourself.
Everybody, good morning. My name is Oscar Rungo. I'm an account executive that's on his 8th year here at Angel Oak. I'm down in Miami. And we do have plenty to be thankful for, plenty of program enhancements, plenty of game-changing tools that we've rolled out this year. So I'm excited to get started with that conversation.
Yep, thank you, Oscar. Chris Taylor, you're the next on my panel. Please introduce yourself. You're on mute, Chris. It's all good.
Sorry about that. Chris Taylor, sunny, warm, Denver, Colorado. I'm my 10th year with Angel Oak. Very grateful for that. It's been just an amazing 10 years. Really grateful to be here and talk about all our enhancements this year.
Yep. And next is Jack Stevenson.
Thanks, John. Jack Stevenson with Angel Oak, located out of the Atlanta office. Been with us for 5 years and excited to dive into some of these enhancements.
Thank you, Jack. And Jerry Calderon.
Thanks, John. Jerry Calderon. I'm been with Angel Oak now going on 9 years. Super excited to be here with all these top professionals from the non-QM industry, and looking forward to talk some enhancements today.
And not the last, but the best. No, Stacy, please introduce yourself. Saving the best for last.
Save the best for last. I'm Stacy Flanagan. I am in the Tampa-St. Pete area, heading into my 12th year as well with Angel Oak, and super excited to share some enhancements with you guys. I'm very thankful for my team and my brokers who have constantly been using me for year after year and trusting me with their loans and making us their first choice in the non-QM arena.
Yeah, so you could tell just by the experience and the tenure here. We have just on this call, close to 60 years of experience just here at Angel Oak. That's not including in the industry. So I feel confident that there's not another non-QM lender out there that can, really tout that type of experience and tenure at the same company. So again, guys, we're going to dive into this a little bit. We're going to talk about the things we were thankful for that Angel Oak worked hard behind the scenes for you to bring to light, so you can again close more non-QM loans and really serve that underserved borrower. So before we do that, I guess we launched a poll that says, have you originated a non-QM loan in the last 12 months, whether regardless of it was a bank statement, a HELOC, a debt service coverage ratio, maybe even a full doc, asset qualifier, all those programs. Have you originated a non-QM loan in let's just say 2025 or last 12 months? So, okay, Joseph says yes, he has. So he's one of the people that responded to the poll. So wow, usually when we do these polls, when we do a deep dive, it's maybe 60%, 70% have not. So this is pretty encouraging, and hopefully, this will continue into 2026 and beyond. So thank you for taking the time out and participating in our poll. Thank you. So Oscar, I'm going to have you talk about, the HELOC. We rolled the HELOC out a little over a year ago, but we made a lot of enhancements to it. If you don't mind, just covering some of the things you're thankful for the HELOC being rolled out.
Yeah, so it's one of the major program enhancements that we made. I mean, every market presents opportunities. And the beauty of what this year and last have presented for us is widening our net to help you all capture more borrowers. And one of those things, and help more borrowers, and one of those programs that we launched was our bank statement HELOC. And so just to give you all just a little bit of market data, and I only have about information from about Q2 and Q3. But today, the average home equity is about $300,000. According to the FHFA through Q2, 70% of first mortgages are less than 5%, and about 33% of first mortgages are between 3 to 4% in interest rates. Now, HELOC balances have risen 11 billion since Q1 through Q3. So it just shows that those people that have helped and taken advantage of the opportunities that this market have presented, they've been able to help multiple clients tap into the equity that they've built in their home, and taking some of that cash out to put towards a business, home renovations, paying off debt, etc. And so we've rolled out this bank statement HELOC that is really a one-of-one program where you can help your clients. And hopefully, I know that 83% of you that have done non-QM loans, hopefully many of you have been able to help clients this year with our bank statement HELOC. But it's for those of you who have not, it is a program that's available that's meant for those borrowers that are self-employed, that don't qualify for traditional HELOCs with their tax returns. And it is underwritten like a bank statement loan. We're going to calculate the income for you up front like we normally do on bank statement loans. Mm-hmm. Some of the enhancements that we've rolled out this year, we've lowered the minimum credit score required on the program to 660. We've raised the max LTV to 90%. So we can do a first or a second up to 90 LTV with a 680. We've added personal bank statements up to a 500,000 line amount. And then the qualifying credit score that we're using today is the primary wage earners mid score.
Yeah. So Oscar, you talked about, everyone continues to hear about the housing market and how there's a logjam of inventory. Oh, there's no business out there. This is an opportunity for you to go back. If you've closed, and a lot of you have closed, 85% of you have closed a non-QM loan. Hopefully it's a bank statement loan. Well, and we'll talk a little bit about our marketing portal, but you guys can go market to those borrowers, and if they're self-employed, God, we got a great alternative for them to not touch that first lien rate and really still tap that equity in their house. Got a couple questions here from David. Are your bank statement HELOCs reviewed just like a standard bank statement loan? Oscar, I'll let you run with that.
They are. The procedure is going to be the same, and then the another tool and enhancement that we've added. So on the front end, David, when you submit your pre-qualification, you submit those bank statements for review. If you have a CLTV that's 80% or less, and your client's asking for a line amount of 400,000 or less, we're going to run a value AVM at our cost. So it is not at a charge to your client. It's completely free. and we're going to return and share that value with you. If your client wants to move forward with the lendable value, then they've just saved money on appraisal. No appraisal needed.
Yeah. And then Joseph's asking, who's the ideal borrower for this bank statement HELOC? And, I'll touch on this here a little bit, Joseph. I looked at these numbers last night. So, since 2019, we all know what happened then is COVID. And we saw a huge spike in new business applications. And Oscar usually talks about this, but there has been no slowdown in new business applications. They're averaging well over 400,000 new business applications a month. Every month, over 400,000 new business applications. So you talk about the last 5-6 years, almost going on 6 years since COVID. Those are all your borrowers. And I can tell you this, the number one state for self-employed borrowers are Florida. So Joseph, I don't know where you are. David, I'm sorry, I don't know where you are, but number 2 state is California. So there's a lot of opportunity. We have an account executive out on the West Coast. He says, if you want to find a self-employed borrower, open up your front door, you will trip over them. So Oscar, I appreciate you sharing what you're thankful for from the HELOC perspective. Chris Taylor, let's talk about continue down that bank statement line there, but let's talk about some enhancements that we've done to our most popular program by volume, our bank statement.
Thank you. Yeah, we've had, the bank statement loan program has evolved over the last 10 years. So every year, we make it more available to self-employed borrowers. Not every bank statement loan is, like a cookie cutter loan, as you know, and there's always a scenario or situation where we need a little bit of an enhancement or an exception. So we've made some really big strides on the bank statement loan. One of them is the percent ownership of a business bank statement loan. Before, we used to be at no lower than a 50% ownership, and 50-50 borrower, we couldn't go any lower. Now we can go down to a 25% ownership. So a lot of times, small businesses are owned by multiple people, and our borrower wants to still get a bank statement loan, and in the past couldn't. So that is a really good enhancement. Also wanted to say the self-disclosures part, in terms of speed and timing, we now allow that on the bank statement loan, which is really, really good. And that's helped a lot. That cuts, 2 days off your process. We also now can take the reserve requirement down to 3 months. And that's, been a great enhancement too. So I think, I think just having that alone is really been a big plus. We're offering ARMs now on bank statement loans. Right now, there's a little bit of an enhancement from a pricing perspective. So that's been really good in some cases. And the biggest one, I think, is the ITIN loan. We now allow bank statement income on an ITIN loan. So that's been really good for the ITIN borrowers.
Yeah, so the couple other questions, I'll go back to Oscar for HELOCs. David's asking, what kind of comp can they expect on a HELOC? If you don't mind jumping on that, Oscar.
The HELOC is borrower paid at this time, so you would just be charging borrower paid origination.
Yeah, so David, hopefully you heard that. It's mostly borrower paid comp on that. So just thank you for asking these questions. So I think I'll go, Stacy, before you get into the DSCR, Stacy. Joseph's also asking, when does it make sense for a bank statement HELOC, or more sense to just do a total refi cash out?
So that's a good question. It really depends on that rate that the borrower has on their first mortgage. If they were one of the lucky ones that were able to lock in on their first mortgage rate in the 2s, 3s, 4s, 5s, it might not be worth it for them to refinance out of that loan. So it's really going to depend on what they have for their rate on their first mortgage as to whether they want to go ahead and take out a HELOC or even a closed-end second versus a total first mortgage cash out refi.
Yeah, and also it depends on, Stacy, right? The loan amount too, right? What do they want as far as cash in hand too? So that's that would be another thought. But guys, here's what I would say. We've got great account executives across the country. they'll work with you. They'll do, I don't want to put extra work on you guys, but they'll do a HELOC, bank statement HELOC for you, and obviously using the same income we're going to use for bank statement full cash out refi. So, and then it's a matter of you position it with your borrower, but use our account executives. They are truly consultants and subject matter expert, and can help you definitely close more loans and make the process with your borrower a lot easier.
John, I wanted to add just another tool, since we're covering seconds really quickly. When you all are coming up with deciding whether refinancing the first in full or doing a second, if you check out our homepage and you hover over calculators, you have a blended rate calculator there. So that's actually something that is new, and we make it very easy for you. So all you have to do is enter the data, and it'll just give you back the information, and that you can make a quick decision on what would be the best option for your customer.
Yeah, and it also depends on the debt, that what they're wanting to do with that money, right? Is it they want to pay off higher credit card debt, or is it just to do a remodel of the house? So those are all, and that's where you as an originator come in as a consultant, right? You're going to sit down with that borrower, and like Oscar said, we've got some great tools here to help you with that process. So, Stace, talk about some of the, and some of these. I didn't save the best for last, but some of these enhancements with DSCR were game changers. So if you don't mind sharing a few of those.
Yeah, definitely the enhancements that we've had on the DSCR are absolute game changers. So the biggest worry, I guess you could say, on a DSCR is, what is that market rent going to come back at? What is that appraiser going to say the market rent is on that 1007? And we don't usually know ahead of time. So when we're doing the pre-qual now, one of our biggest enhancements, if your LTV is at 75% or less, and you're doing a single family or a condo, we're going to run a rental AVM. Now, when I say AVM, there's been a little confusion. It's not the value AVM like Oscar was talking about that we do on a HELOC. It's the rental AVM. So we're going to run a market rent for you automatically when you send us the pre-qual. It's going to ask you to enter the address. And again, this is at 75 LTV or less. You're going to enter the address, and within minutes, we're going to run that at rental AVM. If it comes back at, let's say, $2,000, and your PITIA payment is $2,000 or less, you've got your 1-to-1 ratio. You don't even have to order a 1007. Now, the 1007 will save your borrower $150 to $200 off that appraisal. They still need the regular appraisal for the value, but they do not need the 1007. Now, let's say that it comes in at $2,000. I run the rental AVM. It comes in at $2,000, and your PITI is $2,000. You're close. You're a little concerned that the taxes might be a little bit higher, insurance might be a little higher. You still have that option of ordering a 1007, and we'll use the better of the two. So you're not stuck using one or the other. So if you order the 1007 and it comes back at 1900, I can go back to using that rental AVM. So we are giving you a lot of resources up front to help you determine what that rental market will come in at. So that's been huge.
That's big. I mean, it's just because it's the collateral at the end of a deal when the appraisal comes in. It used to be, and it's not just externally for the borrower and the loan officer, it's internally here. Change of circumstances, it changes the whole structure of the loan. So us knowing that up front, and then also having the flexibility to use and or this or that, it's been a game changer. Really big game changer.
It's been a huge game changer. The other nice thing is, if you're close, work with your AE. Maybe you go interest only, and then we'll use the interest only payment. Maybe you're at a 0.94 and you're not quite at that 1-to-1, and you want to be at that 1-to-1 so that you don't have the hit to the rate for being less than 1. So we can look at other options. Maybe we put them on an ARM. Maybe we do an interest only. Maybe they can get a better rate, insurance quote. So we have different options. So work closely with your AEs and they'll help structure it the best of their ability to be able to get you to that one-to-one. But us pulling that AVM just to get that value up front, the rental value up front, has been huge. Another,
I'm going to
Yep.
just bring up what Joseph's asking, a great question here. How is Angel Oak looking at the role of a 40-year interest only? I know we do that on bank statements, but you want to talk about interest only in general for not only for primaries, but how we look at it. And you just mentioned it for DSCR.
yes, so the 40-year IO is on full docs or bank statements. The DSCR is going to be a 30-year IO. It's an interest only for the first 10 years. After that, it will convert to a 20-year on the DSCR, or it'll convert to a 30-year on your bank statement or full doc. And we're going to use that interest. I apologize. My son just got home from midterms.
Hey, Dylan.
So we are going to, hey, bud, Dante, stop. We're going to use that interest only payment for your DSCR cash flow. So that's
Yeah.
been huge.
Yeah. Yeah, I think,
Point.
Stacy, what you're saying is, our account executive is we're basically going to structure that deal up front, right? And we're going to try and make it work any which way that we can. And, we always joke about the AE being like a confessional booth. Let's work, tell them everything, and they'll help you get through this process quicker. Sorry, Stace, I keep interrupting you. I apologize.
Oh, and John, don't forget about the DSCR calculator to be able to compare your interest only versus your fixed payment as well.
Thank you, Jack.
So what John's going to is that when you go to our website, you don't even have to log in. You'll see where it says calculators up at the top across the toolbar. Yep, right there. And that's where you're finding the blended rate calculator that Oscar was talking about, and the DSCR loan calculator that Jack just mentioned as well. So we have a lot of tools at your fingertips to help make the best decision for your borrowers.
Yeah, and to kind of bridge off that too, Stacy, for the rental AVM, you can now pull, that quote unquote fair market rent value up front. You can go ahead and calculate your entire DSCR and figure out if you have to go interest only, fixed up front, and then it's just contingent upon the appraisal. So, and no 1007 needed if we go with the rental AVM, by the way.
So Stace, I know you talked about the rental AVM. Keep on a couple other. Yeah.
Yep, the short-term rent. So the rental AVM is going to be your long-term rent. So if you're in an area, a lot of us down here in Florida, we have the beaches, we have Orlando, Colorado, you have those ski resort areas. You got mountains, Tennessee, North Carolina. So if you're in an area, or your property, I should say, is in an area where short-term rental is prevalent and you're going to get better market rent off of using a short-term rent. Again, when you guys send us the loan, as long as we have the address, we can pull what's called an AirDNA report. So the AirDNA report is a short-term rental market rent analysis. Now, most lenders will require a certain occupancy percentage or a certain market score. We don't. So again, I think that's where we excel in this AirDNA program. So when you send me, even if you send me an email with an address, or call me or text me with an address and ask me to pull the AirDNA, we can do that right away. So I'll go in, pull the address, pull your AirDNA report, and whatever the projected revenue is, I don't care about the occupancy percentage. I don't care about the market score. I'm just looking at that projected revenue. I take that projected revenue, because it's yearly, divide by 12. That's the market rent I'm going to use. And that will supersede whatever the appraiser put on the 1007.
So Stace, you're not taking 75%, you're taking 100% of that divided by 12. And that's
Yeah.
all done at the prequal stage, right?
I'll even run an AirDNA. Just people have texted me and say, hey, can you run an AirDNA just to make sure this is going to fly?
Yeah.
I don't even need a prequal at that point if they just want me to run it just to make sure it's going to fly. And again, this is going to be at 75 LTV or less. And doing an AirDNA does require a 700 mid score. So that is a little bit different. The other big thing when I'm saying about the score though, we're going to use the highest mid score of the borrowers. So if you have a borrower with a 650 and a borrower with a 750, I'm going to use that 750 mid score. So I'm going to use the higher of the mid scores, and this is only on DSCR. I'm going to use the highest of the mid scores.
And that's big just from rate perspective, helping them qualify, all that just is big. So Stace, we're gonna give you a little break because we did a lot of stuff for the DSCR this year. So Jack, if you, excuse me, Jack, if you wanna jump in here and then talk about some other enhancements we made this year, please.
Yeah, of course, of course. So one big one is that non-borrowing spousal funds are no longer considered gift. So if you have a couple, husband and wife, and the wife has the funds but doesn't want to be on the loan, that is okay. All we need is a letter of explanation, and those are considered our borrower's own verifiable funds. So no need to have to struggle between gift and all that, documenting all that. Instead, we just go straight to, okay, provide the bank statement, letter of explanation, and you're good to go. Okay, that's awesome. And also just to touch base a little bit on what Stacy was mentioning too with the DSCR calculator and all the benefits now, you're ultimately just getting rid of realtor headaches at the end of the day. Instead of having to restructure your loan later in the process when that 1007 comes back, we have an option for you with AirDNA and the rental AVM. You can structure all of your DSCR loans up front and get completely rid of realtors calling you at the 11th hour, having to restructure loans, having to figure out how to make loans work. So thought I would just touch up on that because that's really where it comes into play to benefit all of you guys. Another instance where we've expanded guidelines on the DSCR program, it's going to be we've increased the amount of unlicensed states. So on DSCR, you don't even have to be licensed in the subject property state for certain states. We added Massachusetts and Montana to that list. So you no longer have to have a license for those two states as long as we have a little disclosure to complete. After that, you can originate DSCR loans in those two specific states. If you want to see the full list, by the way, John's going to it. You just go under the DSCR program. You don't even have to be licensed in those states to originate a DSCR loan. Okay.
So I'll use the example like Stacy and Jerry, both in Florida, and so is Oscar. If your originator is licensed, if you are the originator and you're licensed in Florida and want to close a loan in Georgia and you're not licensed there, and it's a DSCR loan, we'll allow you to close it.
Exactly. And then lastly, another thing we've added, just another equity product, a DSCR second. So on top of, bank statement HELOCs, we can do those for investment properties, primary, second homes. We also decided to add a DSCR second. So now we also have an outlet if you want to use the cash flow analysis to qualify your borrowers instead of income, DTI. If they have a bunch of different properties, DTI can get hairy sometimes. We now have a DSCR second for you. So we can put a second position lien on an investment property.
Yeah, Jack, DSCR, like I said, our number one program volume wise is our bank statements. But if you look at unit wise, this year is the first year DSCR now is the number one unit program at our company. And I would imagine throughout the entire lending process throughout any competitors or anyone doing debt service coverage ratio program. So if you have investors, like Jack said, who have closed loans and you have your database of those borrowers, it's a great time to reach out, especially the first of the year as people are, kind of slowly thinking about maybe buying or selling, again, you can create your own little mini refi cash out boom with these second liens and really get a great business and get it quick. I know, Oscar, you're always talking about, ramping your business up quickly and not only using debt service coverage ratio to do that, but using the closed end second also.
Yep. And we have a lot of, it sounds like we have a lot of non-QM pros on the call in the audience, but for those of you who haven't priced out a debt service coverage ratio loan and compared it to, let's say, a Fannie Mae loan, you may want to try that, because a lot of our customers are finding that DSCR loans, they're saving on average cost for the client compared to a traditional agency investment loan. So you want to draw that comparison, when you take the application and you're deciding on which route to take, because at the end of the day, you have a 30-year fixed option, but today we also have 5/6, 7/6, and interest-only options too.
Yep. Thank you.
I was just
All right,
getting ready
Jerry, I
to
know
say the
Chris,
same.
go ahead, Stacey, sorry.
No, you're good. I was just getting ready to say the same thing, guys. Price out a DSCR loan. If you're doing an investment property, you can price it out bank statement if they're self-employed or full doc and DSCR. A lot of times DSCR will come in lower, and even lower than Fannie and Freddie rates, and they don't have to prove anything. They don't have to prove income. They don't have to, there's no DTI. So path of least resistance is this I'm doing more DSCR than I am bank statements this year for sure, unit wise. And just the ease of doing it, rates are in the 6s. I mean, they're no brainers.
Yeah. Yeah. So Jerry, let's do the non-QM quick quote, and then talk about some other things. I know Chris talked on a couple things, but we could talk about them as you're going through this. And this is one of the things we redesigned this year too. So go ahead, Jerry.
Thanks, John. Yeah, so the non-QM quick quote, that's our pricing engine. It is super, super user friendly. All you have to do, you don't have to have a user ID or password. You just have to go to our main web page, and then it's gonna, once you click on the non-QM quick quote, the first question is gonna ask you to select your channel type. 99% of you guys are gonna select broker. Then it's going to ask you to select the type of income documentation that you'd like to do, whether it's bank statement, DSCR, HELOC, full doc. You're going to enter what it is that you're doing for income documentation. Once you click on that, then it's really simple. You're just going to enter whatever the drop downs are, your loan amount, the loan to value, whether you're doing a purchase, cash out, refi, rate and term. We can also do delay financing. I know that's something that wasn't touched on, but keep that in mind for the DSCR program and all of our loan programs. Then you're going to put in the credit score, the unit type, that we can go up to 4 units. The state that the property is in, that's very important. So we know whether you want a 30-year fix, 5/1 ARM, you're going to select that for your amortization type. If you want interest only option, you can do so. It's by selecting on the drop down. It'll let you know if the loan qualifies for it or not. And then it'll automatically default to a 5-year prepay. However, you can choose to select less than that if you'd like to. Then the remaining of the drop downs are very simple, whether your borrower is U.S. citizen, non-perm, permanent res, and then your compensation type is something that you're going to always want to input there. Whether we do borrower paid or lender paid, that's up to you. That's the 2 ways that we can compensate you here at Angel Oak. If it is a DSCR option, then you will have to select whether you believe that DSCR is going to come in or not. Like we mentioned earlier, there's no reason you should know this up front if you're at 75% LTV or less, and we're running that AVM for you. Once you do that, it's going to actually give you the pricing scale off to the right, okay? All you have to do is select the pricing option that you would like at that point. The moment that you select the pricing option that you'd like, and look at some of these rates that we're looking at them at, 6.749 and 6.1 is actually as close to par as you're going to get on this particular scenario. That's pretty aggressive for a non-QM
Jerry,
loan.
talk about, like, I picked the lender paid comp at 1, but if they go 102, we'll provide a lender paid credit here. And that's still less than 7% on a loan that you're providing no income, no job information. It's pretty good.
100%. Yeah, man. You can make up to 3% on these loans, and a loan type of depending on what your company selects for the lender paid compensation, you can either choose to give them the rate option that they would like with a lesser rate, or you can give them a higher rate, and then we're just going to compensate you on the front end. So it's just two different ways that you can do this as a different option that you can present to your bar, especially if they're rate conscious. It just gives you other options in order to be able to compete with them. Once you guys get the pricing options, you're going to get off to the right. Then if it's a DSCR loan, you want to make sure that you have the property address on there so we can run that AVM for you. And you want to make sure that that address is accurate also. If there's an actual unit number on there, we want to make sure that it's included, just so that it matches up perfectly when we're running that AVM. But then the rest of the information is pretty standard. You're going to select the account executive. I always say, if you don't have one, feel free to select myself. And then you can just fill out the rest of the drop downs on there with your company information, your MLS, your email address. The comment section, guys, this is one that I strongly encourage you to use. This is a way for you to communicate with your AE and your AE only. Okay, nobody else is looking at these comments, but this is a good way for you to put anything about the loan that you want them to know, whether it's closing under an LLC, something that we allow in all of our loan programs. Maybe want to mention that. Whether it's we're looking for an exception of some sort. That's something you're going to want to include in the comment section. And your AEs are really good about reading the comment section and making sure that there's anything in there up front that they need to know they're aware of it. Then you're going to just upload your 1003. Obviously, we want to complete 1003. The more, the better. The credit report. And then if you have any additional documentation that you'd like to, we don't need a 1008, so you don't have to bother with that. But any additional documentation, if you want some assets reviewed or anything else that you'd like to review, you're more welcome to do so under the additional documentation type. Once you do that, then you simply click on the blue button that says submit. The moment you do that, that will go to your account executive. Okay, your account executive will receive that quick call. All of our AEs here at Angel Oak are great about providing these quick calls within a 24-hour time period, if not less. Most of us try to do them on the same day. So that's something that we strive on, trying to get you the quick call as soon as possible so you can get this borrower off the street as soon as possible. Once we have that, you have that quick call, then at that point you're ready to request disclosures. Something that Chris touched on that we added this year is, and this is huge, guys, is that you can now go ahead and request disclosures on your own. Once you go into our website and you go into our TPA portal, you can automatically request disclosures on the same day. So it probably, let's say this quick call came in at 9 a.m. in the morning, your AE got it back to you by noon. By 3 o'clock, you could have disclosures already out to your borrower and ready to get the loan moving forward. So that's something that we just added this year, and I'm extremely thankful for that. That takes about 72 hours away from each loan that we had to deal with before in the past. So strongly encourage everybody to utilize that. We can still generate an LE for you if that's something you choose to do. But that, again, that's more time consuming. Don't know why you want to go that route if we're trying to get the loans closed as soon as possible.
Yeah, I know Keith is jumping off the call here, but this is going to be recorded. We will get this out before end of day today. I just want to make sure everyone is aware of that. And Jerry, you're right. What I'm learning more and more is that this pre-qual is a very, very powerful tool that we provide from an account executive to you as an originator and to you, your borrower, because we're basically doing a pre-underwrite of that file, and any exceptions that we make, and we make quite a few exceptions during the process, that's getting done up front. So if Jerry, Stacy, anyone else on this call is not 100% sure of this going to closing, and that's the other thing we pride ourselves on, and I think that's one of the things that, again, this pre-qual helps us, is we have a very, very, very high pull through from submission to pull through to closing. And that runs in the 70s. And, you know, I don't even know if agency can say that they have those type of pull throughs. So, so I wanted to share that with you all. And then one other thing, we still have a little bit of time. I wanted to talk about, you know, our marketing portal. And I'm going to try to log in, and I'm hoping it's not going to slow me down here. So.
John, while you're logging in, and
thanks.
forgive me if we covered this one, but it's one of my favorite enhancements. To me, it's game changing, and I wish I could see a show of hands from the audience. But How many of you all have ever had a client who was W-2'd with a company and then they transitioned them to 1099, and now they've only had a year under their belt of being 1099? In the past, we needed 2 years of a borrower being self-employed, but today we actually are fine with someone that's been self-employed less than 2 years down to a year. And so the types of income that we can accept there are 1099 and business bank statements. So to repeat myself, if someone's been in business less than 2 years down to 1 year, we're okay with that loan. They just need to show that they were in a similar line of work the prior 2 years. They need to have a 720 FICO score. On a purchase and rate and term, we'll do that up to 80 LTV. And on a cash out, 75 LTV. So,
And Oscar, I'm glad you brought that up, because we're about to go into 2026. All of these 1099 borrowers, 1 year self-employed borrowers, they're just about to receive their 2025 1099s. So instead of 1099 year-to-date bank statements, we just need that 1099 and then that proof of W-2 history prior, and we can help close your borrowers.
Yep.
Yeah, so Jerry, you want to just take me through flyers, and then Stace, I'll have you do social media, then Chris, you do the broker presentation?
Yeah, John. So you guys all have access to our TPO portal. And if you don't currently have access to it, then I encourage you to get with your account executive. We have on there customized
And if you don't have one,
flyers.
reach out to Jerry. No,
Yeah, if you don't have one, reach out to me. By all means, please do so. Yes, absolutely. But yeah, the flyers are all customized. And guys, this is huge, because these are flyers on all of our different programs. We have anything on there from the bank statement program to the HELOC program to the I-10 program. Anything that you can, non-warrantable condos, anything that you can imagine is on there. Okay. And we can actually customize these flyers to put specifically your information and your company information on there. So these are designated strictly for you guys to be able to utilize and to go out there and market yourself as being able to offer these loan programs. This is something I feel it's not utilized as much as it should be. But I would strongly encourage you to go into our portal and to try to mess around with some of these flyers and see that we can put all of your company information on there, and then you can send these out to your client, your database, as you wish to do so.
Yeah, Jerry, you said something, it's underutilized, right? We
Really
serve
is,
the
yeah.
non-QM borrower out there. It's an underserved borrower, right? Self-employed borrowers, investors, people who don't have traditional ways of documenting income. That's what we do. That's all Angel Oak does, by the way. We don't do any government lending, but this is an underutilized portal. Not just the flyers. I think I counted it. I think there's like 70 between the flyers, social media posts, and the realtor presentation. It's like 70 ways you could touch your referral base or market yourself. And I'll ask Jack, what does it cost to access this portal?
Nothing.
What was that?
Nothing. It is free.
Wasn't a trick question, Jack.
Yeah. I was thinking about saying that it's going to cost. No, it doesn't cost you guys anything. So again, we're just trying to set you guys up for success here. I mean, that's all we're doing with the pre-quals, the marketing materials, everything that we do. We just want to make your lives easier and as efficient as possible to help you guys close these loans as quickly as possible. That's all we're trying to do here, is hold your hand through this whole process and just knock out these loans with you and get you guys paid.
Thank you, Jack. I was going to say make you money. Stace, talked about the social media section of our portal, marketing portal.
Yeah, so social media obviously is the wave of the future. It's the now, it's the present, it's what all the young kids are using. Social media is definitely the big influencer. Whatever platform you're using, we have these social media snippets, if you will, that you can literally just cut and paste and put it right on your social media platform for different types of loans, asset qualifier, bank statement, DSCR, why rent when you can own. You can also I have brokers that actually will grab one of these and do it every week. out of sight, out of mind is so true. And how many times does it take for you to see a commercial or see something before you actually register what it is that bar or that broker does? So I have brokers that use these weekly. They'll grab one and maybe they'll even put before the actual snippet of say they do a bank statement one, they might even put an example of one that they just closed. Maybe it was a jumbo loan. We do bank statements up to $4 million. So maybe it was something that they want to put out there that they just closed a $3.5 million bank statement loan. So we have the social media post for you as far as making it look pretty, giving you enough to be dangerous about the program. And then they add their own little blurb of a experience that they just closed, just helped get into their new home, their dream home. So these, again, all these are free. We want you to succeed. We want you to be able to promote yourself. We're giving you the tools to do so. It costs absolutely nothing. So we're here to help you guys close more loans for sure.
You do need, like Jerry mentioned earlier, you don't need credentials to use our quick quote and the other great tools that Oscar mentioned and Jack mentioned, whether it's the blended rate calculator, the DSCR calculator. You don't need credentials, but you do need credentials to access our marketing portal or to obviously submit a loan to Angel Oak. So Chris, last but not least, the probably the most, I think the social media and our flyers are great, but I think one of the most powerful presentations you as an originator can do, and I'll let Chris go ahead and talk about what he does.
Yes, so a lot of you give presentations to partners. You're trying to go to realtors, to financial planners, attorneys. So we've developed really good presentation material that you can put your logo on and give presentations in large groups. A lot of us AEs around the country, and we will volunteer our time to also help you with the presentation. But these are just really good. Talks about the basically the overall products in the industry, not always specific to Angel Oak. Sometimes Angel Oak isn't even mentioned, but you're just trying to educate your public about how you're a non-QM expert. And many times if you're giving a presentation in front of a group of realtors, which is really the best group to be talking to, a lot of times you'll end up finding that they'll give you their own loan after the presentation. I've seen that happen many times. I think the biggest percentage, John, if I'm not correct, of borrowers in our portfolio are realtors, aren't they? I think.
Yeah, realtors are third, but they're about 9, almost 10% of the loans we close on bank statements are realtors. That's not including debt service coverage ratio because we don't ask for job or income information. So I'm sure it's a lot higher on that debt service coverage ratio.
So what a better, if you can do a realtor's loan themselves, what a better believer in the product if you can go out and give a presentation. But I encourage you to reach out to your local AE and let us work with you and be your investor behind the scenes to talk about these products so you can become a product expert. We're giving you the tools to do that.
Oh. Yeah, so guys, I know we're getting close to the top of the hour. So Chris, while you're finishing up on that broker realtor presentation, again, Chris mentioned it. Could you imagine having a Jerry, Stacy, Jack, Chris, Oscar, or any of our account executives across the country presenting on your behalf, not saying anything about Angel Oak? They're just, and I'm going to use Joseph because he asked a lot, and David asked a lot of great questions. If I'm the account executive, I'm going to say, what are you going to do when you have a bank statement borrower? You're going to refer them to Joseph or David. So if you have an investor, going to refer them to Joseph or David. Nothing about Angel Oak, nothing about John Geminade, nothing about Jerry, Stacy, any of them. Just it's all about you during that presentation. So Chris, what else are you thankful for in your life, and what are you looking forward to in 2026?
Well, just again, thankful for all these great enhancements. One thing I don't know if we highlighted enough, but on the HELOC, 680 to 90% cash out. That's pretty powerful on an owner-occupied loan, and then 80 on an investment property. Yesterday, I received a pre-qual on a loan. We did the pre-qual, we did the disclosures, and we submitted to underwriting all in one day. I am so grateful for that. It's just
I love
really
it.
powerful.
I love it. I
So
love
other
it.
than
Jack,
the beautiful sunny weather in Colorado, I'm loving that.
and you're getting a prequel and a submission within, day. That's
Right.
beautiful. Jack, go ahead.
Yeah, we're thankful for all of our clients. Me specifically thankful for all of my clients that obviously bring us loans and obviously enjoy helping everyone, but also want to be thankful for our great team. We got a great staff behind the scenes to help you guys. That's what we're here for. So again, and want to thank you for trusting us with your business, because again, can't do anything without you guys. But yeah, just thankful all around, because it's just a blessing, doing this every day and just being able to do something that I enjoy.
Yeah, well, you got married this year too.
Yeah. They're on the back burner.
You're thankful. All right,
Thankful for
Jerry.
that.
Jerry.
John, I'm so blessed. I have so much to be thankful for, and obviously I'm thankful for my family and everything that I'm blessed to have. But I'm just blessed for Angel Oak and the team that we have behind us. For you, John, Moses, my sales manager, and the ops team that we have. It's just an amazing group. It's funny as I'm looking around and I'm looking at this call. I've been here 9 years now, and watching Stacy with glasses, John with glasses, Oscar with glasses. We've just all grown together, and it's just. I'm truly just blessed to be a part of such a great team, such a family atmosphere, and everything that we have here in Angel Oak is just a blessing.
Thank you, Jerry. Oscar.
I want to thank everybody for their continued partnership. We appreciate your business. We appreciate your trust in us. Hopefully today's message is that we're committed to helping you succeed. And for those of you that aren't working with us yet, let's get a head start on 2026. In the chat, just let us know if you're not set up and you want to get set up with us. That way we can get you set up with an account executive. And right now, broker applications are only taking about 24 hours. So we're expecting a great 2026, and we're looking forward to helping you with your growth.
And Stace.
Saving the best for last. I am also thankful so much for our team, John, for you, for our management. Every department works so hard to get your loans to the closing table. I'm really thankful for my brokers, my friendships that I've cultivated, that I've met through being in this industry for so long. I have lifelong friends that I hang out with on a every weekend, just getting to know them personally from this business. I love my job. I love what I do. I love the friendships, my brokers. I'm thankful for you guys always looking at us for your non-QM loans first. If we can't do it, I'm thankful that you gave us first shot. For 2026, I'm looking forward to more enhancements and helping you guys close more loans.
Well, thank you all. You guys are always, like you said in the beginning of the call, you guys wanted to pull you guys because you're always volunteering your time and your expertise to represent the company. So I'm thankful to work with such, great professionals, the best of the best, and consider you guys family. So I love all of you. And just to everyone on this call, thank you. If you've sent loans to Angel Oak, thank you for your business. If you have not, I think you could tell we have the best of the best. And as you all said, and it's not just us client facing, it's everyone behind the scenes, from disclosures to setup to underwriting to closing to back office, TPO, all of them. They all are here for you. So hopefully you feel like that. And just from everyone here at Angel Oak Mortgage Solutions, wishing you and your families a Merry Christmas, Happy New Year, Happy Holidays, and be safe, and look forward to 2026. Thank you, everyone.
Thank you, everybody.